hotel brands seem to have started by owning and then focused on management afterwards. What are your thoughts on that, the order of that playbook as it relates to vacation rentals?
You hit these stages of building a business. Just take them one stage at a time. Okay, I'm going to start a company. Like, you need an idea, work on that. Really think through your strengths, weaknesses. It seems a little bit crazy when you think about it. You just take it into component parts. You aren't top committed to anything, and you have the ability to pivot.
And how does that decision come about of you deciding to go out there and start your own company? How did you come up with the concept?
It's harder to build a scalable world-class brand if you're not distribution channels, really.
Hello, everyone, and welcome to the Hospitality Edge podcast, where we bring together what we think are two sides of the same coin, real estate and hospitality. Today, I'm very excited to be here with John, the co-founder and CEO at Topkey. Very excited to have you on, John. How are you doing today?
Good, man. Very excited to have the chance to sit with you, man. Really excited to be here.
Awesome. So, John, let's get straight into it. Tell us a little bit about your background and how you got into, let's start with entrepreneurship and then,
Sure.
eventually hospitality, right? But what's your background? How did you get into entrepreneurship?
Yeah, for sure. Stepping back a couple years, I was previously at a company called Hotel Tonight, and we were bought by Airbnb. And so part of that journey was just being exposed to, I would say, kind of relatively early stage company out in San Francisco, getting bought by Airbnb, and then joining a much more mature company and kind of being there for almost 2 years and just seeing kind of the crazy scale that they had achieved. And so for me, for lack of a better term, I was just really inspired. I mean, when I was there at Airbnb and, got me really thinking about what I wanted to do longer term with my career. So I had spent the better part of my career in finance and then transitioning out of kind of investment banking, corporate development, mergers and acquisitions into the startup world at Hotel Tonight, moved from New York to San Francisco to join that company. And so I had spent a lot of time, in this space, but I hadn't really started something personally. And so I was just, thinking a lot about what I wanted to do long term, and just seemed like circa, late 2019, early 2019, actually, when I really started to think through this. And then ultimately decided to leave and start Topkey. Really, it was like a year and a half later. So it was almost, the end of 2020 when we left Airbnb. But that whole process was partly driven by just being inspired by what I saw at Airbnb, and then also seeing kind of a successful outcome at Hotel Tonight. And then separately, just really thinking through what my skills were and wanting to do something more with my career than I thought I could achieve being at a, I would say mid-level manager at a big tech company. So
Got it.
Yeah.
Nice. Let's break down the timeline there. So first of all, you were, on the investment banking side of things. Then I guess the intro to hospitality was on this, correct me if I'm wrong, but on the Starwood Hotels, when you came in, corporate development, M&A and whatnot. And then that was sort of your intro to hospitality?
Yeah. So I can go a little bit farther back. I went to undergrad at Florida State. I was an accounting and finance major at Florida State. I started very early, right out of college, doing auditing. And I very quickly decided this wasn't what I wanted to do long-term in my career, and was able to apply and get into Duke's Buchel School of Business for like a 1-year master's program there. So that was 2011. And in that time, basically joined the cohort, went through, and I was able to get an internship at an investment bank up in New York. So I spent like the spring before my year at Duke at an investment bank interning through the Fuqua network. Really thought that would be a formative and like, I think an area that I wanted to explore. And so I ended up joining the Fuqua class and then basically just recruiting for, at the time, investment banking analyst roles. I ended up joining Wells Fargo Securities, which was based in, New York, San Francisco, Charlotte. I was put on the Charlotte desk and I covered industrial. So I did that for 2 years, covered paper packaging, forest products, timber REITs. So, naturally made the transition from that to doing hospitality. Actually, the reason I joined Starwood was my buddy who was sitting next to me in the bullpen, as they call it, down in Charlotte. And then I was often in New York because one of the folks that I worked for, a little bit more senior, we were all the team was back half in New York, half in Charlotte. So we were all going back and forth from New York and Charlotte a lot. One of my buddies had joined Starwood Hotels in their corporate development and M&A group. And so he recruited me after my second year. Investment banking is just this crazy kind of whirlwind job. You work, 80, 90 hours a week pretty consistently. You're kind of always on call, especially the junior folks. And, it's a great experience because you learn like how to work hard. You also learn like how to be really, I would say, accurate with the output, because so much of it is pitching and selling the product. And then if you're on a deal, everything is kind of, hair on fire because, companies are being sold and companies are being acquired, and you're kind of responsible for that, or raising debt or raising equity. So it's a great experience for any like more junior person as they're coming up in their career. You just learn so much, and you really do like work so much harder than I think most kind of early jobs out of college people have the experience at. And so you end up really getting comfortable just grinding and being comfortable with that. So any job you take after, it's always kind of like, oh, this is not as hard. So after 2 years, joins the team at Starwood Hotels. And then when I was at Starwood for basically the majority of my time there, we were either in the process of like evaluating company sale, or we were actually running the sale process. So Starwood ended up initially was looking to merge with another big hotel company. We were, I think at the time, like the 5th biggest hotel company in the world, depending on the metric, market cap, what have you. And then we ended up getting bought by Marriott. And then separately, I worked really closely with our team down in Orlando, which was called Vistana. And Vistana was our timeshare business. And we were basically tasked, our team in Stamford, Connecticut was tasked with like selling that business. And we ended up selling it to a company called Interval Leisure. So in a lot of respects, I worked on kind of a similar business to vacation rentals, but doing something very different, selling the timeshare business at Starwood, and just got to know that business really well and understood like a lot of the dynamics behind it. And it's funny because even at that time, we were like spending a lot of time just digging in on, comparable companies. And like there was a little company out in San Francisco called Airbnb, and it was like, it would pop up in equity research reports, and you kind of talk about it and be like, oh, it's kind of interesting what they're doing. This is 2013. So they were still pretty early, but like definitely like a player. And, kind of flash forward 7 years later, I'm working there. So, it's just an interesting thing how the career works. But I spent a lot of time like in hospitality, basically from that experience at Starwood. So,
and before we go into like how you then go to Hotel Tonight, and then how that ends up being acquired by Airbnb, like let's say if we're looking at sort of your experience up until that point, up until Starwood Hotels, what were some of those key lessons, key takeaways that you took with you? I mean, one, you said, the ability to work hard and grind from the investment banking years. But then what about on having worked with, a brand like Starwood, and having dealt with so many transactions as well on the M&A side? Like what, if you're closing that chapter of your career with like, okay, key takeaways, key lessons that you applied afterwards, what would you say those would be?
Yeah, it's interesting because in hospitality, and I think it's relevant for a lot of property managers in our world, so much of the value in the hotel assets lies in the kind of, you can almost call it goodwill, but like in the reputational branding of these assets. So at Starwood, when I was there, we had like 9 brands. And so Sheraton, Westin, St. Regis, Loft, all the way down to, the Element, and, some of these smaller kind of brands, the W, Le Meridian. So there was a bunch of different kind of collections of brands. And that's really what these hotel companies ultimately are. They're just these huge collections of brands. Obviously, they have a shared resources, and they have distribution. They have all sorts of other aspects that make them valuable. Of course, like the rewards network, SPG at the time with Starwood Points, one of the most popular, I think you could say probably the most popular kind of like high-end rewards program for consultants and a lot of like folks who traveled internationally. So Starwood had a phenomenal reputation, I think, as a brand. And they clearly focused a lot on that. Where there was a bit of a gap was when you kind of looked at the brand values. Hotels and hotel companies have like very interesting economics. They're often valued differently if you own a hotel versus if you manage a hotel or franchise a hotel. So in the process of transitioning from owning all of our hotels to selling off and trying to kind of garner these higher multiples, these big owned assets kind of drag your earnings, or excuse me, your equity multiple And so one thing that what I found was really interesting about the process there was just that we were dealing with kind of a drag on our equity value, and then we were a bit subscale relative to like Marriott and Hilton, and that really in these huge kind of global brands, that really made a difference in terms of the value that Starwood was able to garner relative to these bigger brands. So it forced Starwood to kind of make a decision, which is do you to go out and like either merge with a bigger company like a Hyatt or Wyndham or something like that, or do you ultimately do what we did and end up getting bought by Marriott? So the lessons I took away, I mean, kind of from I learned a lot about like how to think about value for assets just through that exercise, and kind of spending a lot of time with the management teams and people involved, and also just recognizing how important it is. I mean, one thing that we saw was distribution was just so incredible for us because we had such a huge presence in Asia, for example. And at that point, that was really something that Marriott and these other brands wanted to tap into. The Sheraton brand in Asia is like really, really strong. And so it was interesting kind of understanding the dynamics of how these transactions come together, but also kind of seeing what's valuable and what's not. The way I would kind of think about it is for property managers, vacation rental companies, buyers are thinking about these things the same way. They're evaluating these assets, trying to understand like how can I value to my business, however it kind of comes about. A lot of it comes about through looking at these types of brands and saying, hey, you built a brand that people recognize, people know about. There's a lot of value just in the fact that you have like a named brand that people can come to.
Mm-hmm.
And, obviously it's a different scale at Starwood when you're talking about global hotel groups. A lot of folks who are buying a vacation rental company in a smaller market or a regional market, it may be just you have a great brand reputation in, Galveston, Texas, or you have a great brand reputation in Branson, Missouri, or in Breckenridge, Colorado, and there's real value there. So yeah, it's just interesting to kind of go through that exercise, seeing it. I think a lot of similarities, even though of course different types of businesses.
Got it. And I have a few points there that I'd like to dig deeper into. So one is this playbook that hotels have sort of gone through of like starting by owning the asset and operating the asset to then start trying to become more asset light and start focusing on management or franchising to be able to get more scale and grow faster without needing that much capital, get better multiples, all of that. I guess my first question to you is, do you think that on the property management side for vacation rentals, like, because I almost see it as I talk to a lot of property managers that take the opposite approach. Like they're starting by managing properties.
Yeah.
Right. And then they start acquiring from there.
Right.
Versus hotel brands seem to have started by owning and then have, then focused on management afterwards. I'm curious to know what are your thoughts on that playbook, the order of that playbook as it relates to vacation rentals?
Yeah, I mean, there are probably a lot of differences, and the biggest one being that these hotel brands are really evaluated on public equity comps. So what happened in the late, I don't know the exact year, but ultimately Marriott was kind of the first company to really figure this out, and they effectively created, out of a big basket of Marriott hotels, they created Host Hotels REIT, and Host was essentially a REIT that was tax advantage, and you can create and own these assets through that vehicle, and it allowed Marriott stock to basically remove the encumbrance of the heavier asset from the balance sheet. So you can remove them from the balance sheet, and then you have effectively a higher valuation that public market investors will give you. In the vacation rental space, I'm not sure that's accurate in the same tone. I mean, so you're thinking about it. I think a lot of people think about owning these homes and then trying to kind of assess them at the, just trying to buy these things in a very specific market, and are speculating more or less. And so, I'm not so sure I have like a great lesson here on like what people should do, and I wouldn't want to sit here and talk about it too much.
If I add to my question, like, because I'm hearing a lot of like funds on the vacation rental side, like they're buying, single family based on market values, and they're thinking, hey, let's put this together and then we can sell it based on cap rates and as a business, as a
Right,
portfolio.
right.
Do you think they're gonna eventually realize, like the big, hotel brands did, that like, why are we doing this? Let's go asset light. Let's just manage.
I, you know, maybe on some level there's more arbitrage available in this market than there is in the big hotel world, just because you're talking about big box hotels and major urban centers, and there's lots of investors who kind of have looked at these things. So it's hard to like really extract a ton of value unless you're just incredibly good at it. So like if you're Blackstone or you're one of these like public traded REITs that just does this every day. Whereas I think in the vacation rental market, there's so much value you can find depending on where you're investing and where you're buying properties. So it does seem like there's a little bit bigger, I would say, kind of spread in terms of the outcomes, just because not a lot of these places just aren't being evaluated across the board by super sophisticated investors. So, if you're sharp and a market, you can probably get in and figure out ways to add value. I think where it gets tricky is just think about like even the iBuyers that have come out, and a lot of them during kind of more in the ZERP era, like Zillow and all these companies that were building out these portfolios of homes, and they're going to flip them. It gets very hard to like buy and sell real estate and do that consistently. And what was funny, I mean, my wife and I were in Nashville, where it's more based. We were looking at houses, and we started to like go look at properties. And this was maybe a year ago now. We were looking at places, and one of the things we could always tell was you'd see these houses, and they'd be very kind of oddly positioned, and then you'd kind of go visit them, and they just had some very strange things with them, and often they were owned by one of those like third-party iBuyers, like Zillow or something. And you'd be like, someone bought this house from corporate using an algorithm. They figured out this is a property we wanted to purchase. But the minute you get to these properties, you see like there's a huge like thing that they probably had no idea about. They were like evaluating them just on a spreadsheet. And, so there's so many smart people that do real estate. I'm definitely not like the most sophisticated in that regard. And I don't even buy like investment properties or anything. So for me, like I'm very much just like seeing it from the sidelines on some level, but it does seem like it's a lot harder to do that like centrally. I think, real estate's such a local game, and, can be the difference between like where your property is on one side of the street or the other. It can make all the difference in the world in terms of like what type of, sale price you can garner. So
Got it. Yeah, no.
Yeah, I don't know. I don't know if that really answers the question, but yeah, it's an interesting thing.
And what about valuation, right? Because you talked about valuation as it relates to the brand. So what's the power of branding in terms of increasing the valuation of let's say a hotel? And again, how does that relate to vacation rentals? Because we've seen companies attempt to build national brands of property management.
Yeah.
Right. And has that worked? Like, is it possible to build, an international recognizable brand of vacation rental property management and get to that same level of a Marriott, and or what's missing for that to be possible? And then what's the impact on that brand component with regards to valuation?
Yeah, I mean, the big thing it seems like that is missing, at least as far as I'm concerned, is it's hard to get and capture guests. And ultimately that's the challenge and that's the benefit of having a brand, the loyalty component that you can achieve if you have really sticky guests. One of the reasons Marriott purchased Starwood was you took 9, maybe 10 with the soft brand, 10 different collective brands. You combine them with the 13 or 14 brands that Marriott had, so you have 25, 26 brands. And to a guest, it's like, hey, I'm never going to stay anywhere else. I'll stay at Marriott's because I have this amazing portal that I can book things through, and I can actually garner these points. It also makes everything else in the portfolio more valuable. The credit card partnerships that they have, the partnerships with airline, there's so many things that it can do for your value, and also creates like shared services and of course like adds value there. So the big things I think for vacation rental companies is building the stickiness that allows for someone to just choose, I'm going to stay at this vacation rental company. I'm going to book at this vacation rental company. I'm going to actually use the kind of portal that they have. I'm not going to go to Airbnb. I'm not going to go to VO. And so to me, that's like where there's value ultimately that can accrue to these brands. I do think when you go work with these companies or spend time in those markets, I think there's real, like, you can see the benefits if you're going there and you're actually staying in one of these properties. Maybe you book through them. You can see why, hey, maybe you want to go back and like spend time. But I think figuring out how to build stickiness, not easy to do for sure, but it's an area that's really where the brand value can accrue. Because if you have that, ultimately you have repeatability, you have lower customer acquisition costs, you have effectively a flywheel that's much better suited to like withstand downturns than if you just are relying on third party distribution. But again, there's lots of folks that have figured out how to do that and make a really great company without having that. So I think that just creates, maybe it's harder probably to, build a scalable world-class brand if you're not going to have those distribution channels really out.
And let's say we're talking, branding as in, okay, what percentage of your guests are coming directly? Let's say we use that as a measure of like how good your brand is. When do you think it starts to make a difference? When do you think it starts to make a difference in terms of the valuation you'd attribute to a company? Let's say you're looking to buy property management companies, right?
Yeah.
You're in the private equity space or whatever, right? And then you have this company that has 20% of their bookings direct, and this other company that has everything through OTAs.
Yeah.
Is 20% significant enough to affect valuation?
I got to be honest, I don't know the answer really. And I think I would almost like defer to talking to someone like Jacoby Allen from C2G Advisors.
Right.
Just not having like spent enough time buying and selling these properties or these types of businesses. I wouldn't feel comfortable even speculating at this point. I think
got it. Yeah, no, it was more speculative. It was more speculative than anything. I was just curious to hear your thoughts. Yeah, because you saw the impact of branding in valuations on the hotel side. Right. So that's why I was curious.
I also feel like I've heard, I'm sure you probably heard them too. I feel like I've seen sessions where people have said, look, we have zero, we have 100% OTA and here's why, and people have very good logic for that. Ultimately, it's, you can kind of play with those customer acquisition costs to essentially like solve for why you might not want to spend a lot of time on direct. And, so there is a lot of gray area there. I do think it probably is harder to kind of prove out like scalable brand. And like, if you're in multiple markets, you really don't have that. Like I've seen lots of people talk about the Casa and the challenges there. Like, I'm kind of curious. I don't know off the top of my head where they're like what their direct versus OTA is, but admittedly, I've not talked to a lot of people who are like, oh, I'm going to go book on the Casa. I'm like,
exactly. Like why have they not? And not a question we need to answer, but like I'm just curious. Like because it seems like hotels have been able to build that brand, but property management companies, I mean, perhaps locally some have been able to, but nationwide, worldwide. I mean, really? It's the OTA. It's the OTA that you say, I'm going to book an Airbnb. Like that's the verb you use.
Yeah.
You don't say I'm going to go book a casa, right? And I wonder why. But anyways, we can think about that further another time. Now, next you go to Hotel Tonight. So tell me about that. I mean, it ends up being acquired by Airbnb. So what are the lessons there? What did you learn? What did you take away from that experience?
Hotel Tonight was just an amazing company, and I had such a great experience through it. Sam Shank founded the company, Jared Simon. These guys just really were thoughtful, meticulous. They built a very, I would say, tech-forward, innovative application, which was the first thing that I would say it was so valuable and interesting about Hotel Tonight. You talk to anyone who used it, and I still use it to this day. I used it literally 2 nights ago. It's a great product. It works. It's really sleek. It, the tagline that I think is still in use is like, book a hotel with 3 taps and a swipe. Just incredibly seamless. The second thing that they did was they had a really thoughtful approach to building out a company and had an interesting business approach too, which was hotels sit on inventory that ultimately goes unsold. If you can partner with the hotel and find the right properties, the average hotel occupancy, depending on like, month or year, I think it's generally I don't know the exact number, but it's 68% or something like that. Like 32% of every room essentially unsold. So Hotel Tonight had a great kind of value proposition to hotels, which was, hey, come to us, give us your inventory. We will put it in a closed application. So it was effectively fenced, meaning you couldn't shop the rates. This is, early on, it's changed over time, but meaning like the hotels could feel comfortable knowing they're not diluting their ADR, which is a big issue in the hotel space, certainly a big issue with brands. And then you could sell a room that you would otherwise not sell. So, to a lot of people, it was very, very powerful.
But wait, I missed the part on how did it not affect the ADR? Like, because it was hidden?
Yeah. So the idea was like Hotel Tonight at when it came out and up until, very, very relatively recently, a couple of years ago, Hotel Tonight was only on mobile and it was only on an application on your phone, and you could only book up a couple days out. Now they expanded the booking window and they did eventually launch a desktop website, but even there was rates that would be different. So the idea would be, if I'm a hotelier, especially if I worked at like a Starwood or Marriott, I might say, hey, I'm not comfortable with you listing that room for $200 if the ADR on the website's $300. I mean, this is the age-old issue with hotels and OTAs. Why is Expedia selling my hotel for $100 less than I am? Why would anyone book on Marriott?
Pricing parity. Yeah.
Exactly. So parity. But Hotel Tonight had a unique value prop because we could literally honestly say to them, hey, look, no one's shopping this. We're not being scraped. And the rate is only available for people who have a login and who have opened up this application on their phone. And then even there were other like ways we could fence it further. So there was a really cool feature that they launched called geo fencing, where you could say target people in Minnesota if you're a hotel in Chicago, right? So for instance, there's an NFL game on a Sunday, you might say, and we're playing Green Bay, you might say, hey, I'm a hotel next to Soldier Field in Chicago. I want to target people in Wisconsin. I'm going to give them a special rate. Only the people in Green Bay could see that, for example. And then they had their own loyalty program. So for hotels, it was a way to distribute rooms, but effectively not be undercutting your pricing on the website. So that was like one very valuable thing that hotels saw. And then, there's another piece of this, which is kind of interesting more about how hotels and hospitality works, is we talked a little bit about asset light. So this concept that, 30 years before Marriott and Starwood merged, effectively there was full vertical integration. So Marriott Hotels owned the property, managed the property, and effectively end to end, right? In 2020, 2017, 2015, what have you, those brands did not own those properties. So there was actually a lot more room for the property management companies, the owners, the REITs to have a stake into what happened with that room. So you might have situations where there was some conflict between the brand and the management company and the owner. The owner says, hey, I want to get my property rented out. And the brand says, hey, I'd rather you not, because I would prefer you, not discount the ADR. And I don't want to lose that parity. There was all sorts of conflict between the brand and the owner and the franchise, the three stools and the leg. And we were able to kind of benefit from that. We would partner with a lot of management companies that were willing to work with us because they're incentivized to actually get those rooms rented, and they were actually paid by some combination of the owner and the franchisee or franchisor, versus like in a world where it was all vertically integrated, Marriott would just say no. So there was a lot of interesting like challenges around like partnering with these folks. And then, you had a lot of independent boutique hotels who would work with us without any issues because they were like, hey, this is a great way to distribute more rooms. And so, that's the product and the business side. I would say you talk about this more, but the culture too of the company was awesome. It's just a really interesting place to work for almost 4 years, and just a great team. And so that all those things to me were really like formative for me as kind of like thinking about building a company.
Nice. And just for context, did you join at which stage of the growth of the company did you join, and how long it took total for the company to go from like starting to being sold eventually?
Yeah, I joined 6, 7 years in. So I was definitely not the earliest employee by any means, but I did join after they had done a round of layoffs. They'd kind of cleaned up. They'd raised a bunch of money, pared back the team. So I joined in a little bit of an inflection point, but it was a great time to join because they were closing in on profitability, building like a strong brand. I would say the challenge Hotel Tonight was a bit subscale relative to like Expedia and Booking. And ultimately that was the reason that I think they chose to sell. It was just that there's just like only so much upside at that level. And so it was clear at some point that, hey, maybe the best outcome would be a sale. So I didn't join, like, I wasn't one of the first employees or anything like that, but they had so many people that had been there since the start, which was really cool. And I worked with a lot of the people, that were very, very early. So there was a lot of continuity, I would say.
And as head of global management partnerships, were you trying to get more hotels to give you inventory? Was that kind of the focus
That's
there?
right.
Or what?
Yeah. We worked with the hotels and the hotel groups to partner with them to give us more inventory. And then we have a team of account managers who would manage the existing relationships with them.
Okay, got it. Okay, cool. Now, so you go through that process, and eventually you guys get acquired by Airbnb. You stay with Airbnb for how long?
I was almost 2 years, I guess, almost. I think I
Tell
joined
me
right after,
experience
yeah,
with Airbnb.
crazy experience because we joined, and really the initial vision for the acquisition was kind of two parts. One was Airbnb obviously had pressure from bigger municipalities and inventory that was being pushed out because short-term rental laws are changing. And so having the ability for Airbnb to surface hotel inventory in the markets was really compelling, and it still is. I think you see this now on Airbnb. You can even book hotels and whatnot on Airbnb. And then, there's a very, very, I think, compelling asset to own in and of its own right. Hotel Tonight still exists, it's still around. And the other thing that what we saw when I joined was, we ended up kind of managing a lot of the more professional groups at Airbnb. So the Airbnb team had kind of been managing, and obviously Airbnb's kind of primary audience and target was like individual owners, property owners. Hotel Tonight team had worked with all these professional groups. So by nature of the acquisition, we ended up getting acquired, and a lot of us ended up taking on roles where we were managing more of the professional groups at Airbnb. And then, just as fate would have it, COVID happened during that whole process. So it's, of course, kind of a bit of madness and chaos during that whole process, because there was a lot of decisions being made at the highest level about what to do with funds and who's going to ultimately get reimbursed. Is it going to be the owners? Is it going to be the managers? Airbnb was pretty much fully in the camp of it's going to be the guests. And so it was an interesting time, but it was also challenging for a lot of folks. It was dealing with a lot of the questions around, is this business even going to exist? I mean, there were so many people that were wondering. I mean, I managed a team of, a few people on my team, and then I managed and worked with a team of 40 people that were in other parts of the country and the world. And a lot of them were contractors. And so we had to let go of that entire team during my stint. And, it's just really tough because it was people I'd worked with for a year and a half, spent a lot of time with. We had to basically let go of the whole group of them. And that was just part of the layoffs that Airbnb went through to kind of shore up the balance sheet before the outcome of COVID was made clear. I mean, no one knew, it's just going to last for another 10 months. This was May or June of 2020. So maybe even earlier, April, May, I forget exactly when, but yeah, it's crazy. So that whole process was very much kind of happened when I was there. And, by that time I kind of knew I was ready to start something. So I was already kind of thinking through what I wanted to do, but certainly was an exciting place to be. I mean, it's an incredible company that was built, regardless of what you think of Airbnb kind of in the market. It's just crazy what they built.
Right. And how does that decision come about of you deciding to go out there and start your own company? How did you come up with the concept? Just tell us about that process.
There's a bit of it's happened kind of in parts. So I spent a year and a half getting to know engineer at Airbnb, who he and I would just get dinner together and talk about ideas. And so we spent a lot of time just brainstorming stuff. And ultimately we actually started Topkey and left Airbnb to start something that was different from what we initially landed on, which was what we're doing today is effectively, SaaS enterprise software with a financial component for property managers. Where we initially started with something very different. This idea was we were going to build a marketplace to help property managers and owners connect. I think other people are doing that much better than we are. And we were very clear early on that, we were going to launch it and test it and see if it worked. So that was initially what we decided to launch when we left Airbnb. and we'd move.
And just
Yeah.
timing wise, do you leave Airbnb and then start this? Do you
Yeah.
start this and once you saw some traction, left
No,
Airbnb or?
we left it, fully left it, had the blessing of everyone at Airbnb that I worked with, talked to people about, hey, I wanted to do this. Something I'm a big believer in is like leaving on good terms and like doing that in a way that there's just, you never know where your career will go. So we did that. And then
Was it a tough decision for you, or was it just clear it was time for you to leave?
it was clear it was time and I was ready. And I thought that like it would be, I think one thing I learned when I was like at Airbnb and kind of think I still feel strongly about is like, if you do a startup, there are a lot of people that might think, oh, it's going to be really scary. And like, if I fail, people are going to think I'm a loser. Like, you kind of don't, if you're in San Francisco, which I was, like, you kind of see a whole other world of people who start companies. And, the way I kind of look at it is like, it's kind of like a video game. I don't say this slightly. I think it's certainly building a business, but it's like you hit these stages of building a business, and a startup has a lot of similarities to that, and it's like, just take them one stage at a time, okay, I'm going to start a company. Like, you need an idea, work on that, really think through your strengths, weaknesses. Then it's like, all right, I have an idea, I need to go test it. So let's start working on an MVP, put a landing page up, put something up that you think you can kind of like validate, figure out how you kind of assess the inputs from the customer conversations you're having. Okay, great. Now we're going to like go out and build like a V1 of the product. Great. Now we're going to go, incorporate. Great. Now we're going to go try to raise a little bit of money. Great, et cetera. And it just keeps going and going. So the way I kind of looked at it was very much in that framework, and it reduced the stress of like, oh my God, I'm going to start a company. Like, it seems a little bit crazy when you think about it, and you'll hear that from a lot of people, but it's like, hey, just take it into component parts, do these little things, understand like where you can like back off. You aren't pot committed to anything, and you have the ability to like pivot, change direction. Certainly there are points at which it can get hard, especially if you've raised lots and lots of money and you have a lot more like stakeholders. It can get harder and harder to do that. But even to this day, I don't feel like we're in that position. So I feel like we've been able to do a lot of that. That ultimately is kind of the framework I took to start, was not so much like, I'm going to go, leave and this is the biggest decision in my life. It was just like, hey, this seems like the right time to try this out and test this. And then, just continue to like build momentum. I don't know if that makes sense, but
no, yeah, no, it's interesting. So you start with, okay, let's put together owners and property managers, and then when do you pivot towards what you're doing now, and when do you get into Y Combinator, or how does that come into the mix?
Yeah, we got into Y Combinator pretty shortly after we left Airbnb. So we left Airbnb in October, I want to say, of 2020. Applied to YC really right after we left. Got accepted and started in 2021. And so my wife and I were living remotely because of COVID, and we had rented a car or bought a car and rented out our apartment in SF, and we're living in different cities. We're in Montana, Idaho, Austin, Texas, and ended up, buying a house down in Florida, where I'm close to where I was from, down in the Florida Panhandle, in 30A, Santa Rosa Beach, which you know very well is like a big vacation rental market. So we started to go through YC during the spring of 2021. And then, the great thing about Y Combinator was that, for those who don't know, Y Combinator is a startup accelerator that backed and has backed a lot of big startups, tech companies. So Stripe, Airbnb, DoorDash, Instacart. I mean, the Reddit, there's just a ton of them. But for us, it was a great experience because you get to work with really sharp, really thoughtful people. Tim Brady was the first employee at Yahoo, and it's widely considered like one of the founders of Yahoo. He was like our direct partner. Worked with him and another guy named Jared, who founded Script, and just like really amazing entrepreneurs. And so but they're very like clear with you that like, hey, your job at that stage is to talk to customers and test these like ideas with these customers. Like, this is the whole approach. And so I spent 6 months trying to basically test different things, figure out the market. And what I realized was I was struggling to kind of see how that type of company could achieve really huge success for outcomes. And if you raise any venture capital, it's really hard to like build a business and not have like a line of sight to a huge outcome. So, and the other thing was, it was really a marketing company. That was like what I was realizing was like, in order to succeed, you really had to figure out how can you acquire homeowners. And it was a marketplace, two-sided marketplace. It's quite complicated. And when you really get into the nuts and bolts, it was just like, this isn't the business that I'm going to build. Like, I wasn't the guy that was going to go figure out how to build a, direct consumer marketplace. It just wasn't my background. So spent like probably 6 months from the time we went through YC and then the time we decided to fully pivot, just really talking to property managers. I did like over 100 plus calls with property managers, talked to a lot of them about pain points, trying to understand what their challenges were, what they're dealing with, and their processes. And that's ultimately what led us to the business we're building today, which was just hearing such consistent feedback about the challenges they have around financial operations, bookkeeping, closing books. And it just, to me, it was kind of really getting a sense of all that from these conversations over the course of 5-6 months, and then deciding, okay, this is what we can go build, and this is what we can go actually do. And so, yeah.
That's awesome. So I did a survey, and I'm trying to pull it up. I did a survey on LinkedIn the other day, and I asked people, let's say you had $1 million to invest in any feature or function of your property management software, what would that be? And everyone, like the one that won by the most was, accounting and bookkeeping and anything finance related, trust accounting and bookkeeping. So 2 questions there. One is, why all these PMSs that have raised all this money have not been able to figure this out? And then how are you solving it? Just wrap it up.
So the big challenge that I think our industry faces, and it's pretty consistent. If you have 10 properties, you have 2,000 properties, you're effectively trying to close your books as a company, and then you're trying to individually close the P&Ls of each unit or listing you manage. And why is that more complicated? It requires you to be basically doing way more work on that side of the ledger than you would have to if you just ran a insurance company or you ran a veterinary. You have a lot bigger responsibility to your owners who are your customers. So, it's scary enough starting a business, it's scary enough trying to build a company, to then have the obligation to oversee and manage the full kind of P&Ls of each asset, and then go bill your owners or get reimbursed from your owners through the month-end close process, and need to be accurate and need to be correct and also need to be compliant. Those things just continually create challenges. And so I think the reason it's such a pain is because often you're doing those things in different systems, which is a big component to start. You have your operating books, you have your trust accounts, depending on which state you're in, you have different rules and regulations that govern each. And then you typically have to work within different systems. So you have an accounting ERP system like QuickBooks or NetSuite, and then you have PMS, Streamline Track, ST, what have you. And so all that creates complexity, and all that creates friction in the close process because you have to get it right. If you don't get it right, you risk owner churn, you risk leakage, you risk mistakes, and you risk regulatory scrutiny. I mean, you can actually get in trouble if you don't do these things correctly. So all that, I think, is driving the pain point, and it's an area that is not easy to get right.
And how are you guys solving it? What do you guys do? How can people get in touch? Who are you best suited to help?
We work with any company that has more than, let's say, 10 properties, and we work with folks that have over 600 properties. So we are very, very much focused on the short-term rental market. We are fully kind of built to serve a short-term rental property manager. We have the ability for them to create credit cards. We can create bank accounts that can pay out yield up to 4.14% for our bank partners. We have a full AP bill pay product that really streamlines owner payouts, vendor payouts, taxable documentation. And then we integrate to most of the major PMS and accounting systems. And so Topkey is basically built to help bookkeepers close their books more efficiently. And we talk about this ad nauseum. We have an office in person. My head of customer success sits right behind me. Every single call he has with the customer, I would say on average, he's doing 6 to 8 per day. I'm not exaggerating. Even regardless, like we talk to everyone all the time. We're constantly booking time. We're constantly meeting with our customers. We're learning features that they want. We're learning like where they're happy with the product. We are constantly pushing all that input back into our product. We've never had a company churn since we launched, over 2 years almost. And what I would say is most important that I'm proud of is that we are really like just getting started. Like there's so much more that we're going to be doing around financial operations. We've kind of built the baseline, and we have the ability to kind of pull in bank accounts, credit card transactions. We actually just today released our public partnership with American Express. So a press release went out today, and we can support third-party credit cards like American Express, Visa, and MasterCard as well, coming soon. And so we have a lot of exciting things that are coming. But for the most part, what I would say is that we understand the challenges that property managers are dealing with. And if you work with us, you'll be able to close your books faster, and you'll be able to kind of like start to remove the stress that you might feel every month. It's not going to go away fully, but it's going to be significantly better. And if you don't believe me, talk to any one of our customers. We have a lot of them, and you can reach out to them or reach out to us or some combination.
Love it. Love it. Yeah. And where can people get in touch with you or with, someone from your team to learn more?
Our website is topkey.io. I'm on LinkedIn, and then you can email me as well, john@topkey.io.
Awesome.
Do a demo for you personally. And yeah, just
love it.
Love to talk to anyone who's interested to learn more.
All right. Well, John, I could keep you here for hours, but we have other meetings we both have to get towards.
Yes, sir.
Thank you for your time. Thank you for sharing a little bit about your background, your story, what you've learned. It was very insightful. And I hope I can have you back in a few months or years so you can tell us all about how you've scaled, and I wish you the best of lucks with this project. I think it's a much needed product.
Totally. Thank you, Sebastian. It was awesome to be on the program with you.
All right. Take care. Bye-bye.
Okay.